Hello, everyone. Welcome to another Wednesday with Wendy, where we make small business ownership less stressful, one step at a time. Today, we're going to be talking about QuickBooks and the difference in the bank balance and the QuickBooks balance. If you do your own bookkeeping, you may have noticed in the banking screen where you enter all the transactions, at the top, there are some numbers associated with each bank or credit card account, and sometimes they match up and sometimes they don't. Well, today I'm going to explain when those numbers should match and when they probably won't match and what to do about it. Before we get to that, I'd like you to know that my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, let's get right to it. Let me share my screen. This is always a bit nerve-wracking. There we go. Okay, today, once again, we are in a sample company that QuickBooks Online provides, which is great because it allows us to experiment, try out some things, and not mess up anyone's actual stuff. Plus, I really can't show you my books or any of my clients' actual books, so we have to use pretend numbers here. So some of these things, my accountant heart is a little, my perfectionist self is a little annoyed because I can't get it exactly right because these are fake transactions and fake bank accounts. But it'll be enough. You probably don't care about that. You just want to know, how what do these numbers mean and how do I fix them? So I'll give you some strategies for that, even if I can't make the numbers work exactly here because these aren't my numbers. Okay, so if you use QuickBooks on your own, this screen should be really familiar to you. You can get it by going over here to transactions and then bank transactions, and that shows up across here. And this shows how many bank and credit card accounts you have connected to QuickBooks. This company has one checking account, one savings account, and one credit card. Okay, so if you're doing this on your own, you know that these transactions down here are the transactions that have gone through your account. And so you should be on a weekly, monthly, daily basis, whenever you have time, you should be entering these transactions so that they actually get in QuickBooks. So let's start by, let me explain these numbers up here. Okay, so this is the checking account. If you notice, see if I can highlight that. This number right here, that's the amount you have in your checking account according to the bank as of the close of business yesterday. So the way banking works is this. During the current day, whenever you go somewhere, you swipe your debit card, a check clears if you still use checks. Those transactions show up in your bank account immediately, but they're listed as pending because what they have to do, and I don't know the current terminology for this. When I worked in a bank one time in college one summer, and we called it proof. Overnight, all of the transactions that we did during the day would go to proof. And that was, I never saw it, but I heard stories. It's like you have a bunch of people in cubicles in the bottom basement of a floor, and they are entering everything and making sure that their debits equaled their credits, that the amount on the check to get deposited is the amount that gets deposited. And they just go through and they prove that everything is correct. So we called it proof. So the banking still seems to work a lot like that. Again, I'm not a banker. A banker could probably give me more correct technical language. But I've noticed whenever you go, like the transactions today, like if you walk out today and go buy something at Walmart, the transaction will show up in your bank account because they got to make sure, it gets subtracted so you don't overdraw the account, or they don't let you overdraw the account. But it truly doesn't clear the bank until tomorrow. Once it goes overnight to proof, which I'm sure is automated and electronic by now, then tomorrow it will be officially in your bank account. So, what these transactions are, this balance right up here is the bank balance as of the close of business yesterday. Okay? And then these transactions down here are also all of the transactions that you haven't entered yet as of the close of business yesterday. And so, what you should do, and again, this is just we're making this up. This company rented some equipment and then got a refund. Okay. Oh, I need to mention this. Okay, so whenever I enter these transactions, did you notice that? Maybe I need to go undo some of those. Let me show you again. I get carried away here. Okay. This is the balance that QuickBooks has. So, QuickBooks is not your bank. I know they're connected, but there's two separate registers here. So, this is the balance. This part right here is how much the program, your QuickBooks file, thinks you have in the bank. It's how much you have told it you have in the bank between the deposits and the checks. It calculates that balance. So when you add one of these transactions, let's look at this. Okay, the balance in QuickBooks right now is $376. If we add this $1,200 equipment rental payment, look, that went down to a negative 823. So when you do, and then this, they got a refund on it. So that's going to go back up. Instead of negative 800, we're up to negative 600. And then this is some accounting fees. I don't know why your accounting fees would be somebody refunded you them, unless this is an accounting company. Who knows? It's sample. It's all just made up. All right. So that also made the negative balance not quite as negative because it was a deposit. And I hate that these are negative today. It doesn't help for explanation purposes for showing y'all how this works. But again, it's the sample company. I don't control it. And this is what I'm dealing with. So we're just going with it. So, okay. This is the amount. This negative 568 is the amount that QuickBooks, that is in QuickBooks. This negative 3,600 is the amount at the bank. Okay. Why do those two not match? Well, there could be several reasons. First, sometimes during the day, the bank will update your balance. So if this is the afternoon and something big has cleared, the bank may come through in QuickBooks with an amount of, a bigger deposit or a smaller or a check or something that will cause this balance to change, that that hasn't come through, the transaction hasn't come through the bank feed yet. That is one reason it could be different. Another reason it could be different is if you've entered something in QuickBooks that hasn't cleared the bank yet. These are traditionally known as outstanding transactions. You have outstanding checks and outstanding deposits. So let's say you had to pay your rent, and I do this, the office I rent here, there's not an electronic way to pay. So I have to write a check and mail it. So in order to make sure I remember that I wrote that check, I go ahead and put it in QuickBooks. And so when I do that, when you go to like new check and then choose an account, see up here, you tell it which bank account to come out of. Okay. So if I go ahead and do that, this balance in QuickBooks will go down. The thing is, I'm still holding on to the check in my hand. The bank doesn't know anything about it. They have no idea that I have written a check because the check is still here. I haven't even mailed it yet. So that would make the QuickBooks balance be lower than the bank balance because the bank doesn't know about this check yet. It's not until the check gets sent to the bank, goes through proof at night, that it truly shows up in the bank feed and at the bank, and then those two things should clear, and the balance, barring anything else, should equal. Okay, here is another reason that your balance may not equal in QuickBooks, and this is specific to QuickBooks. Okay, so they have a savings account. The bank says they have $200. QuickBooks says they have $800. This deposit matches up. So there we go. We add it. There are no more transactions, but still we're $600 off. So what on earth happened there? Well, a lot of times this is what happens. When you connect a bank account or bank or credit card account in QuickBooks, it will pull the balance over because it's got to have, you got to do, it does double entry bookkeeping. So you got to have two entries for everything you do. So it'll put some money in the bank account here. It's got to have an offsetting entry. And that's what this opening balance equity is. And it's kind of ironic because um, that it balances it for accounting purposes, but for actual financial statement purposes, we don't leave it in opening balance equity. We need to change it to like owner contributions or some other account. So in addition to it not being in the right place for accounting reasons, it also throws the bank account balance off. So you can see, should be 200, it thinks it's 800. Again, I don't know exactly why. This is fake. It's fake account, fake numbers. Just the general concept is correct, even though I'm like, what happened here? My brain just starts going, It's kind of funny. Okay. So what I do on these, let's see if this works. There we go. Okay. Like I said, that balance, the opening balance equity is rarely correct. It's rarely the right amount. It's rarely where it needs to go. So I usually delete those and then I reconcile. But at least here you can see the ending balance. You see me up here. The ending balance is in QuickBooks is $200. The bank balance is $200. So if we go back to here, ta-da, on savings, the bank and QuickBooks match. So many times you want these two numbers to match, the bank balance and QuickBooks balance. But like I said, if you're doing transactions daily, then the bank balance is still yesterday's balance. QuickBooks is the current balance. So those could get off that way. And so you have to, don't worry daily if the numbers don't match, because 9 times out of 10 it's because of outstanding transactions that you've done today and the bank just hasn't officially cleared them yet, or things you've put in QuickBooks that haven't hit the bank yet. And so in the next few weeks for this month, I'm going to go over other reasons why these balances may not match and what to do about them. We're going to talk about reconciling accounts and how to look at transactions that have never cleared the bank and see about getting them out of QuickBooks. Because a lot of times what happens, especially if you're doing bookkeeping on your own, is that you get in QuickBooks and you think you know what you're doing. So you enter something, but it's not the right way to be entered, or it came through the bank a different way, or a lot of times it's like you charge somebody $1,000. Well, then the credit card fees came out and your payment processor just deposited, $970 in there instead of 1,000. And so there's different ways to make sure that you match those up. Okay, that is it for today. Like I said, oh, I could talk about this forever. I keep wanting to go further and say, "Oh, and then you can do this and this and this," but you don't care. You just want to know, why do these numbers not match? And I got to have something to talk about the rest of the weeks, don't I? So, okay, let me stop sharing. There we go. Okay. I want you to remember that no one is born knowing how to do this, certainly not QuickBooks. And it's not taught in school. QuickBooks isn't even taught in business school or accounting school. QuickBooks was not on the CPA exam. Learning to use QuickBooks is its own special skill. If you are feeling lost and overwhelmed, you are not alone, and that's why I'm here to help. If you found this helpful, share this post, comment, and let me know. If you found this helpful, let me know your questions. I'll answer them on the replay. And head over to my website to sign up for my newsletter and all that good stuff. All right, y'all have a good day.